And for more on what's in store for Akzo Nobel, the company's CFO, Keith Nichols, joins me live from Amsterdam. Mr. Nichols, good morning. Thank you very much for joining us today.
Good morning.
A lot of your business depends on the construction industries worldwide. What trend are we witnessing within this industry right now?
Yeah, we're right in the middle of the downturn, of course, particularly in the mature markets. I think we're more GDP relative than pure construction. Construction does have an angle for some of our coatings businesses, but what we see is really a split still between the mature world and the higher growth markets. Much stronger demand and therefore higher volumes, higher growth rates, for example, in China, Southeast Asia, and our Latin American businesses, offset by what has been stable now for 2 quarters, the fourth quarter and the first quarter, in our mature markets. We still, have strong market shares. We try to maintain those. We try to take some market share in these weak markets. But that essentially is the difference between the two in terms of demand.
You're having to cope with higher raw material prices. Are you able to combat that? How are you combating that?
We're right in the middle of that and making good progress. We've been here before, of course, in 2006 and 2007. It's a mixture of self-help measures, looking after our own costs, managing our margins, making our processes more efficient, coming out with new products as well where we can charge for new technology and new innovation, and also being transparent with our customers and explaining how raw materials are impacting us and having to pass on price increases. But yes, it is a headwind. We're facing it at the moment. It takes us more than a quarter in which to manage this, and we're right in the middle. I think sequentially our margins demonstrate that, where we're up slightly, but year on year, of course, you see the impact versus where we were 12 months ago.
As you say, open communication is key with your customers. I mean, what sort of price increases are you able to pass on, and in which sort of areas?
Well, you understand I'm not going to be specific, but we tend to sit down, talk about what the raw material components are, what level of impact we're having, what their needs are, what promotional activities, and secure what is appropriate for us in order to continue on our organic strategy, maintaining acceptable returns, etc.
You reiterate,
but we're having success in that.
You reiterated today that you're aiming for more than 5% sales and earnings growth in 2011. Further ahead, you have a goal to reach 20 billion euros in sales in 5 years. I mean, to reach those goals, I imagine M&A is going to prove a big part of that. Are you going to pick up smaller competitors? What sort of sizes of companies are you looking to buy to reach that sales goal?
M&A could well play a part, but it's predominantly an organic strategy. It's going to be about building our distribution faster and covering more of, say, the Chinese market. It's going to be about reaching into mid-tier markets rather than just being at the premium end, for example, in Brazil, in Latin America. In terms of size, last year we did 3 small bolt-on acquisitions that gave us very attractive positions in certain markets. The packaging coatings market in Turkey, for example, and the vehicle refinish market in China, such that we're now the #1 refinish player in China. And you should expect similar sorts of organic bolt-on or technology type acquisitions. But I say again, it's primarily for us an organic strategy, and our organic plans get us significantly down that path.
Keith, thank you for joining us today.